The accrual basis examples. So this is accounting assumption A4, the fourth accounting assumption. Let's take the first example. In January, a business sold $50,000 of goods on credit to a client. So we delivered the goods to the client, whatever the good is, it doesn't matter, it could be a service even. But the point is the client or customer is not going to pay for these until February. That's a pretty common business transaction. Here's the problem. The business waited until they got the money here to record it as revenue. So they said that is actually revenue in February. Let's just go back a step. We made the goods or delivered the goods here, but then didn't get the money till here. Is that revenue for January or February? Well, the business recorded it in February. Is that correct? It is not correct. The accrual basis assumption has been breached. And that's because revenue must be recorded when it is earned, not when it is received. It is earned the moment you give the goods to the customer or provide the service. So really, those goods or that revenue was earned in January. So we should recognize that as revenue in January, even though we haven't got the money. That's not important here. We're trying to recognize when we earn the revenue. Let's take another example, but with an expense. On the 1st of October, a business paid $900 for its insurance for the next 3 months. So that's going to be used. So basically, when you think about it, insurance is like an asset. It covers you for it's an economic benefit for the future, but we're going to use that up each month. So we're going to use $300 in October, $300 in November, $300 in December, but we paid it all in October. So because we paid it all, this business said that's an expense for October. All of it, all 900 goes there. Is this correct? No, it's not. Why not? Well, the accrual basis assumption has been breached. How so? The insurance expense should be recognized when it is incurred and not when it isn't paid. What does that mean? It means that, well, we're actually going to use $300 of this a month. We're going to incur economic benefits or use up economic benefits. So what we should do is recognize an expense each month of $300. That way we're recognizing when the expense was incurred and not just when it was paid. If we put it all here, that makes no sense. That's saying there's no expense for November or December. Third example, during June, a business received an upfront payment of $4,000 from a client for goods that will not be made until August. This happens all the time too. This is one of our later topics. Customer gives us money in June. Let's say we're going to make something. We're going to make a kitchen table. So it's a big job, fancy kitchen table we're going to make. They give us the money here because we say, I'm not going to make that table for you until you give me some money up front, and I won't have it finished until August. That happens all the time. So I guess the question now is, well, when should we record the revenue? The business recorded that revenue for June. That is when we got the money. However, you're not going to finish that table and deliver that table to the customer until August. So is that correct? We're going to say no. The accrual basis assumption has been breached. The revenue must be recorded when it is earned and not when it is received. So in this case, you will not earn that. Even though you got the money, you will not earn that revenue until you deliver the goods to the customer. So we will say you should wait until August before you recognize that revenue is earned. Final example. A business has a monthly phone and internet plan where the bill is received on the last day of each month to be paid by the 14th day of the next month. You'll find this when you start getting your phone bills at the age of 18. Most phone plans, you make your calls in January and use your data, and then you get the bill on the 31st and they say you got to pay it by, say, the 14th of February. So we're going to use $300 of call and data in January, and we're going to pay for it in February. Then the next month in February, we're going to use up data and calls of $400, but we don't have to pay for it until March. That's how most phone plans work. So I guess the question now is, how do we record all this? Well, this business has been recording each bill as an expense when it is paid. What are we talking about here? I'm saying this. Use the calls for January here, but didn't pay it until February, so we didn't recognize the expense here until we paid it. And then we used $400 of calls in February, but didn't pay it until March. So as soon as we paid it, we recorded it as an expense. Is this correct? It is not. Why? Because the accrual basis assumption has been breached. And that's because an expense must be recorded when it is incurred, not when it isn't paid. What do we mean by this? Well, let's take some specific examples. The expense was incurred each month as the phone and internet was used. So if I use $300 a call and data here, that should be my expense for January. Even though I haven't paid it, it's not important here. What we're looking at is, was it incurred, used up, consumed? Yes. Then in this month, I used $400 of data and calls, so that should be my expense, even though I'm not going to pay it until March, and so on and so forth for the future. So the key word there is it's got to be recognized when the expense was incurred, used up, or consumed, and not when it was paid.